Ring, ring, ring.
Hello.
Hey, it's Karen. It's that time of the year.
Oh, yay.
Oh, don't dread it. Listen, embrace it. We're going to help you save money.
I know, but my hairdresser told me I needed
Stop
it.
listening to your hairdresser. I told you. Don't listen to anybody on a golf course, a boat launch. Not when you pick up a beer, and not your hairdresser.
All right,
Even though I love your hairdresser.
I saw your email. It said profit and loss, balance sheet. I've got everything in QuickBooks, so I've pulled up those reports, but I don't know what I'm looking at.
Don't worry. I can explain it, and we'll do that today. So I want you to feel comfortable with what you're looking at. You cannot help and manage your business if you don't feel comfortable doing it. But don't worry. I'm not going to talk to lingo.
I feel stupid looking at this and not understanding.
You're not stupid. It doesn't matter what you do for a living because I can't do what you do. So don't worry. I've explained this. We can bring it down to the ground in the basics where any redneck around would be able to understand it. So don't worry. I'm going to teach you.
All right, let's get to it.
All right. I'm Karen. I'm a CPA, entrepreneur with big ideas, and I'm the mom.
I'm Katie. I'm a payroll specialist, business owner, and detail-oriented person that makes things happen, and I'm the daughter. Welcome to Cheers to Business.
All right, all kidding aside, what's the biggest thing when you look at a financial statement that you have the problem with?
It's just a bunch of numbers.
I know, but when you do payrolls, you don't see numbers on a page. You know the system to it.
Right.
All right, you know where they are means something. You know, all right? So a mechanic, where his tools are, where that parts of that engine are, or that roofer, or, a doctor, surgeon. It doesn't matter what you do. You know the tools of your trade, and you know where the placement and what it means. All right, very basic. A balance sheet. You have two parts to a financial statement. A balance sheet and a profit and loss. Sometimes you'll hear it called an income statement.
Or P&L.
Or P&L. All right. Leave that one right there.
Do they call a balance sheet BS?
I do, yes. It depends on who prepared it, but yes.
Remember that one time that intern of yours abbreviated association?
Yeah, you big BS ass. I had to send that one back when we went to the client. It was funny.
All right. Profit and loss, balance sheet.
All right, balance sheet. It's a picture. If your balance sheet is dated today, it's a picture of a point in time. It's what you have in the bank today. It's who owes you money and how much today. How much in equipment do you have today? How much do you owe in sales tax, payroll tax, whatever today? How much do you owe on any loans, or how much do you owe, in your accounts payable probably? All right. Then you have how much is your company worth today? That's all a balance sheet is. So it's going to change. It depends on what day you run it for. If you ran it for 12/31/17, it's going to be different because it looked different a year ago than it's going to look today.
Okay.
All right. Income statement, P&L, profit and loss. That is your transactions over a period of time. What have you done? How much did you sell during this time period? How much did you spend for your cost of goods sold for this period? How much did you pay your accountant? How much do you pay your payroll company? How much do you pay to do that podcast?
Can I interrupt? Okay.
All right, wait, tell the wine we're drinking today, Katie. And look, I'm tired of y'all making fun of me. Katie, you say today.
Oh, gosh. All right. Donkey Market sponsors our show, and the wine for today's show is a...
I'm so glad you got this one.
I can't say it without the accent.
Don't say Chevrolet.
Chateau Voix Cheval, also known as Chevrolet. It has an L. And then Lalande de Pomerol. We're just going to go with that. It's a red wine. Donkey Market, DOMKE, can give you more information on that. It is quite delicious, though.
It is very, very good. Thank you, Brooke.
Okay.
All right, seriously, back to business.
Balance sheet is a point in time.
Yes.
Correct. So let's say that I run my balance sheet for today's date.
Yes.
And then I pull the P&L with the starting date of today and the end date of today. Will it match the balance sheet since I'm doing my P&L for one day in particular?
The net income won't match because you're looking over – a balance sheet runs on a one-year basis. All right? Your fiscal year, which can be anything. Your calendar year means it ends on 12/31. Almost everybody's fiscal year is now their calendar years because most people are S corporations. All right? So – I know it's getting a little complicated, and I'll get back. The balance sheet knows it runs for 1 year. So it's automatically picking up from the beginning of the year, but it's what it is today. But if you run a profit and loss for today, it's only going to show you your activity of today.
So the activity.
The activity.
Gotcha.
Good question. I like how you angled that around to get my answer.
Yeah.
I get it.
Analytical brain.
Very good. Next.
So we've kind of gone over what each of those are.
Mm-hmm.
So, I was not an accounting major. I was a finance major. So our job was to analyze the kind of financial statements and all the different formulas.
Mm-hmm.
So as an accountant, as a CPA, what do you look at? Okay, you've gotten someone's profit and loss, or let's say that they're pulling it up themselves. What should they look at?
Well, looking at it from the business owner's viewpoint is different than me looking at it from the CPA and tax side of it.
I think I want to touch on something before we get into that, actually.
Okay.
Just putting on my newbie hat.
Yeah.
Breaking down a P&L. What does it even show as far as, there's the top portion and then you've got your bottom portion. Same thing for the balance sheet. You've got kind of these different sections.
You do.
So can we go over that before we go into...
Oh, yeah. No, it's important. The profit and loss is probably the easier one.
Okay.
So let's start there. Because at the top, have your income. It's what you sold. Think about it if you charge sales tax. Here in town, it's 10%. You don't want your sales tax going, you don't want to pay tax on your sales tax. Okay? You collect it from your customer. Technically, it's never your money.
Okay.
Even though it's painful to pay it once a month because it's coming out of your checking account. You're collecting it from your customer. All right. So there's different things on that, but that's getting into a heavier breakdown. All right. So at the top, you have income. The next part is cost of goods sold. What does it take in order? What are you selling? Well, what did that object cost you that you're selling? That's all that is.
Okay.
All right. Selling wine. All our references go back to wine.
the wine bottle, the packaging.
You had to buy that wine. All right. You bought it from somebody. You didn't stomp on the grapes like Lucille Ball, and package it up in a bottle. You bought that wine from some distributor.
Okay.
All right. So that's where the cost of that wine, the cost of the goods that you're selling.
So even what if you're a service-based industry and not a product-based business?
All right. I'm the perfect example. So are you. It's our staff.
Okay.
Okay. What does it take paper,
internet,
software, whatever tools you're using. All right. Because what do you know? And here's why. All right. The next thing right after the cost of goods sold is gross profit. What is your profit margin?
You hear that a lot on Shark Tank.
You do, because that's how much money you got left later. All right, think about it. If you take, and that's bringing it back, I mentioned before, I call it the 100. For every $100 that you've got coming in, where does your money go? All right, if you take your cost of goods sold and you divide it by your sales, that's going to give you the percentage of, for $100, let's use 100. How much more simpler can you get? I sell that wine for $100. It cost me $50. Okay? So income minus my cost of goods sold is my profit.
$50.
$50. So my profit margin is 50%. My cost of goods sold is 50%, and my profit margin is 50%.
So what would you consider a good profit margin?
Depends on the industry.
Okay.
Totally depends on the industry. There's no one that's the same.
Perfect.
All right. So when you learn to do the 100, okay, that's when you can start watching, because think about it. If you buy 2 bottles of wine, they move together. So all of a sudden you got 200 in income and 100 in cost of goods sold. So you still have a 50% margin.
Well, my question, is it equally, or is it an equal percentage over time? For example, if let's say that my gross income really exceeds, and then therefore I'm getting discounts on my cost of goods sold, wholesale pricing or whatever, do you see a reduction in that gross profit margin as the gross income grows?
Yeah, or if your cost hasn't gone up but you raise your prices, you could see the same thing.
Okay.
All right, but rule of thumb, they should move together, increasing or decreasing.
Okay.
Because they're related to each other.
But if you're making conscious efforts to increase that gross profit margin,
yes,
then I feel like that's something to work towards.
It's either reducing the cost of goods sold or increasing your sales.
Awesome. All right, moving on.
All right.
Gross profit margin.
All
Next.
Right. That's gross profit margin. That's how much is left after you paid for the product that they bought.
Okay.
Or service, doesn't matter. All right. So next you got overhead. How much does it take you to run that company?
Expenses.
Rent, your accountant, regular computers. Everybody's got to have a computer now. Got to have internet. Got to have a cell phone. You may have some meals or continuing education.
Okay.
All right, whatever it takes to run the business.
All right.
All right, so do the 100 on that. So if you take your total overhead or total expenses, divide that by your sales, that's your overhead percentage. All right, so let's say that our cost of goods sold is 50%. Our overhead is 25%. There's nothing else. That means for every $100 coming in, you're going to keep and put $25 in your pocket.
All right.
That's rare, but in that example, that works. Yeah.
So, and really, for new businesses, it's typically negative, correct?
Yeah, I like to say 3 years. I know Payroll Vault took us a little bit of time, and it depends on the industry though. When people can find a niche and they come out with the winner, put your seatbelt on. That ride's going to go fast, and you just got to be ready. And that's when. I think a lot of people in that situation that you're talking about have talked to people before they went into business. They didn't wait till they've been in business 2 years or start getting a bunch of notices from, every single municipal office around before contacting and getting some help, either, from a CPA or having a lawyer set them up right or whatever.
Okay. And then let's move on to balance sheet. So that was profit and loss, also known as income statement or P&L. So moving on to the balance sheet, which is a certain period in time.
It's my favorite part. People think that the bottom line is my favorite part, and it's not. The balance sheet is my absolute favorite. And here's why. If you don't have a good bank balance, you don't have all your income and you don't have all your deductions. Okay? If you don't have your receivables right or your payables right, what if your accounts receivable is too much? Well, then you're paying too much tax on money you're not even going to get. Payables, what if you're missing deductions? All right, let's say you got loans on the book or credit cards. Don't get a credit card. Whatever you owe or even vendors. If that balance isn't right, then you have it deducted for interest, probably. You've just been putting your whole payment to that account all year long, so you haven't deducted interest. What if you don't have some vendor stuff in there and you're not deducting that stuff? You're going to pay too much tax. The method to that long explanation is if your balance sheet's not right, then your books aren't right. But if your balance sheet is correct and you can rely on every number you're looking at and you go, I know that's how much is in my bank account, whether it's cleared or not. I know that's how much people owe me. I know that's what I have in equipment. I know that's what I owe. Then everything else is just placement on your profit and loss and income statement, but your bottom line is not going to change because the equity is on how much you're worth and whether you're positive or negative and your money's on the balance sheet. I always start there. But I run it comparative too. You know how you like to run your profit and loss comparative? Mm-hmm. Balance sheet's the same way. For example, I come to you before I call you, ring, ring, ring. Mm-hmm. Hey, I'm showing you've got income of $200,000.
Okay.
Wait, no, actually, you just lost your cookies.
Good or bad?
I know, it's a good conversation.
No. Is the $200,000 good news?
Yes, you have a great problem.
Oh,
let me tell you what.
No way, I didn't make that much money.
Are you sure?
I don't know.
Okay, well, let me tell you what I'm seeing. All right, because I looked at it before I called you. You bought $50,000 worth of equipment. There's $50,000 sitting in your checking account, and you didn't have that in there last year. Looks like you paid $50,000 on some debt of some stuff you had bought 2 years ago, and you took $50,000 home. Your immediate response is, but I only have $50,000 in my checking account. Okay, but your bank account was zero last year, which means you made that this year. You can't pay off your debt unless you're making profit. You can't buy equipment unless you go into debt or are making profit. And you can't take any money home and buy a boat unless you're making profit. And no, you can't write off your boat. Have a nice day.
That's those boat launch discussions.
You do not know how many I've had. We live on the Gulf Coast.
But I take clients on the boat.
Then write off the stuff for that day, but don't put that boat on your books. Get that big old flag. Mr. IRS, come on to me. Please throw me in that briar bush.
I see what you mean about explaining how when you're looking at the balance sheet or these financial statements, whichever it is, you're seeing opportunities. And
I'm looking ways to save tax.
You're seeing the picture. Whereas me as a business owner, I'm just looking at that bottom line.
Sure.
Am I in the hole or?
But what I want to help you do is look at where that money's going on that profit and loss. if you're looking at it and you said, oh, I made $100,000 this year. I'm so happy.
Goals.
What if you, I'm looking high. What if you could have made $150,000? That's what I'm looking at too.
Well, and so that number that you're looking at, that what if, is determined by what happened up top.
Yeah. Are there any errors? Do the percentages, what you're spending on to have a credit card processing, is it too high?
Okay, so
how much are you paying on your bank charges?
If I was to look at my financial statements and something just looks really off, whether it's a huge negative bottom line or a huge positive, red flag, what could cause that? Just kind of some key things that you've seen over your career.
Yeah, and I say, if anything makes you go bulldog.
They don't know what bulldog means.
I
know. I'm just trying to help out the people.
Okay. She had a little puppy bulldog, right? And so if you said anything, Bruno, anything to these bulldog puppies, their head goes to the side, their ears flop, and they go,
They just get this really confused face.
So if anything makes you go, you need to stop and check it out. That's called bulldog. See?
Knowledge for the day. Okay. Anyways, if you're looking at your financial statement, something's wonky, what are the top things that could cause that? Most common.
Okay, most common. Most common is that you enter stuff in your QuickBooks and then you were syncing your bank account and it downloaded the same thing and you've got duplications.
Okay.
Number 2, somebody just made a journal entry backwards.
Okay.
Because you really should leave that to your accountant.
I hate journal entries.
Did you do a journal entry?
The debits and credits are backwards.
No, they're not. Those are backwards.
So this is why I did not get an accounting degree. I went to my first class, first day, and in my head, debits are what come out of my account. Credits are positive entries to my account.
Because that's the correct way to look at it.
No, but it's backwards. The moment we had to draw that T-chart, I was like, screw this, peace out. I'm going to the finance department. I'm done. So anyways, I don't touch journal entries. So incorrect journal entries for people like me.
That's as bad as talking to somebody at the boat launch, okay? Especially when you've been out drinking beer all day out on Sand Island. You just don't do that. All right, I'll make you journal entries.
Okay.
All right. But that is one way. They try to do things
error?
right. Other errors are having your setup wrong in your accounting software, especially if you're billing clients.
Okay, so like the liabilities and expenses.
Oh my gosh. If you've got items that are showing up on your invoices and you got that jacked up, it's going to jack your numbers all up. I see it all the time. So it's not a bad idea is to have somebody that knows the system, and it don't have to be your CPA. Somebody that knows the system, have them help set it up.
Your chart of accounts.
Chart of accounts for one, and keep that simple. Don't make it 12 miles long. That's ridiculous. You can't fathom what it means.
15 sub-accounts.
God, they hurt my head. Do you see that? I mean, I have to take aspirin. It's so bad. No, keep it simple. What it looks like on your tax return, that should be your chart of accounts. If you notice a problem in account, then you can drill down and look at detail. Don't have Office Depot, Staples, Walmart on your profit and loss statement.
Okay, so what about errors on the financial statements? In your career, what have you found where something was wonky, but it was a trigger for something else, where it wasn't necessarily a mistake, but it was a clue to something that was wrong?
Guy walked in and I said, why are you paying your bookkeeper that much? He said, what? I said, it's right there. You got your administrative expenses. Look, it's double what it was last year. I said, I drilled down and checked the W-2 and that's what it was. He said, I don't pay my girl that much. I said, you did last year. She stole $35,000 from me. True story.
And the balance sheet showed that.
The profit and loss.
Oh, I stand corrected.
Yeah.
So keeping an eye on that is important.
Oh, yeah. Another way is, on your bank account that, if you should have more money than that, where's the money going? It's got to be posted somewhere. That's why looking at your financial statements is so important.
I'm a big nerd. I love numbers and I love metaphors. So when you mention the balance sheet, it's almost like, I go to the doctor for my annual checkup.
Right.
They run that blood work. So when I get those results, it is that blood work for that day in particular.
Right.
And so that balance sheet, it is the numbers for that day in particular.
You are dead on because that's what your blood was that day. That's what your sugar was. That's what your blood pressure was. That's what your temperature was that day.
So one thing that kind of triggered, again, I love metaphors.
I do too, and I got one for you.
So now, like, I feel like I don't have a primary care doctor, but me and my husband just booked one because, we're getting older and we feel like we should go now so that we have that baseline. So let's say 3 years from now, something goes wrong.
I told you I was your warning, not your example.
Let me stay on track. Those baseline numbers kind of give us our,
that's your gauge.
That's our gauge. So I feel like, in business, not waiting until... You shouldn't wait until something is wrong.
Debt is your blood pressure.
Go on.
You want to get your blood pressure down, right?
Yes.
When I owe too many people too much money, my blood pressure is high. So I want to get my blood pressure down. So therefore, I need to reduce my debt.
Love it.
Ta-da!
Was that the metaphor?
No, that was an extra one. That was a bonus.
Bonus! Ding, 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 ding.
All right, no. If you go in and you get your checkup and you go, oh, I'm not real happy with those numbers, what do you need to do?
Well, I mean, I would ask my doctor, what should I do?
That's good, too.
But then taking those actions to correct it.
Okay, but you have to stay on top of what you're eating, what you're exercising. You have to stay on top.
A conscious effort.
Thank you. You have to do the same thing to your books if you give a crap about your business and want it to grow. Booyah. That's my
mic
metaphor.
Drop. You're walking out.
I'm done.
Cheers to consciously being aware of the financials of your business.
And it's okay if you don't understand and get the whole thing, but if you have a basic understanding, you can help manage your business better.
That was the longest cheers ever.
Okay, you going to do it again?
Cheers to financial responsibility.
Cheers to trusting your accountant.
Cheers to boat launch accounting advice.
Screw that. Do not listen to people at boat launches. I'm telling you, they're wrong. And they've been drinking way too much beer in the sunshine. Y'all, thank you so much for listening and being here with us today. I'm Karen.
I'm Katie. Please be sure to subscribe to Cheers to Business podcast on iTunes or anywhere else that you get your podcast. Visit our Facebook and be sure to give us a like. And if you have any questions or topics you'd like us to discuss, shoot us an email from the website cheerstobusiness.com.